You've had about 7-8 minutes to chew over these numbers. What stands out to you, sir?
Thank you, John. As Jim Bianco pointed out, the challenge for the market and for policy would have been a consistently strong report. This is a somewhat strong report, but not consistently strong. So it is strong on the earnings side. It is strong on the labor participation coming down side, less supply, and is also strong on a small beat on employment. But the fact that the unemployment rate went up means that the Fed will be comfortable cutting by 25 basis points, means that the market will increase the probability of this happening. So on the policy front, this did not complicate what would have been a messy situation for the reasons that Jim pointed out. On the economy side, John, just a confirmation that the labor market remains solid and that U.S. exceptionalism is set to continue.
Mohamed, it makes the decision easy to cut 25, maybe. Still got to wait for CPI next Wednesday. I wonder, though, if it's still just as hard to signal anything for 2025 in the news conference. What is that exercise going to look like in 2 weeks' time?
So it would be hard for this Fed, because this Fed is so reactive, is so data dependent, that it will simply tell us that it will remain data dependent. And I suspect that while the range is going to compress a little bit, you're still going to have quite a wide range in terms of the terminal rate. You know, the Fed always has two options. The option it took in 2021 and got completely wrong, which is to look forward, and now it shied away from that and went to the option of being excessively data dependent. And I suspect they'll stay excessively data dependent. So we're not going to get any strong signals other than we will remain data dependent.
Mohamed, last time you were on for the jobs report, you said inflation is not dead. What kind of number could we see that could potentially change the Fed's thinking at this upcoming meeting?
And you heard from the chair saying that inflation has been more stubborn than he and the Fed expected. Look, we're going to see inflation stuck in the 2.5% to 3% range for the Fed's preferred measure, the core measure. And the Fed is going to have to make a decision. My gut feeling is that it will run with this number there, promising us 2% down the road. And I suspect we'll see 75 basis points of cuts still, but they're going to be spread out. Like you just heard, it's going to be cut, pause, or skip, and then cut. And then we're going to have a huge conversation. Was this a hawkish skip? Was it a dovish skip? So we're gonna go to the third differential now because we lack proper policy guidance.